I'm here. Sorry for the slight delay. I was actually in for a minute, and then I got lost my connection for some reason. So, is everybody here? Can everyone hear and see the screen okay? If so, we'll get started. Great. All right. Let's keep going here. So today we're just going to simply apply core strategy to the FX markets and look for some big picture trading opportunities as well as some short to medium term trading opportunities. And we'll do that over the next 45 minutes or so. All right. So let's first start with the U.S. dollar. And again, if you're new to these sessions, you can always go back and review some of the recordings if we use some terminology here that you're not used to. Yeah, we're looking for market turning points based on a very specific strategy with rules. So let's just review the dollar. The last few times we were together, remember we've been talking for a while about this 81.50 just being a rock solid level, which actually proved out to be the case, and that obviously there was no significant demand until we get down to about 78.50. That's kind of been our plan, is to watch for the dollar to move from the 81.50 area down to the 78.50 area, and that's still the plan. And that's what the larger time frames are showing. So when we come down to the smaller time frames, like we went over last time, we have this new level that comes in around 81.60. That turned out to be, again, another rock solid level. So the fact that, price is barely touching our supply levels in these areas tells us that the dollar is, at price levels where supply greatly exceeds demand. Does everybody understand that? Okay. RFK, good question. No, I really just use it for correlation. You should trade it though, right? I mean, we've been going over this dollar chart for years and FX Street, and I don't think we've been wrong in big picture direction. We just should have traded that. No, just kidding. Well, actually, I'm not kidding. Anyway, so you see these two lines I have drawn in here. You'll see as I go down to a smaller time frame, we had a couple nice pullbacks in here to this area. Now price is going through, which we expect. So, yeah, exactly. Our MRC, the fact that you're touching these supply levels, again, just supports what we've been saying all along. The dollar is really overvalued, and there's probably plenty of room for the dollar to fall. Okay. Sandile, it looks like the battery's dying, but it's actually plugged in. The battery is dead. That's why I have to keep the computer plugged in. So I have a brand new computer sitting here next to me, a nice Lenovo ThinkPad that I haven't even turned on yet, but I'll start using that soon as I can get caught up. Thanks for catching that. Let's go down to a smaller time frame here. Okay. Whoops, that's not what I wanted to do. Let's go 60, and let's go. Yeah, I didn't mean to do that. Okay, let's go, let's scroll back. You'll see where those two lines come from. So you see this little level here? Again, one of our solid demand levels, right, where banks are buying. And, whoops, I don't know why the chart did that. But anyway, a great level, worked out well. Where did it go? It's right here. But now we've been back there. We're back there once there, again there, and now we're going through this level, right? Which is what we expect. There's really no demand left. So where's the next stopping point on the downside? So when we look below 79.60, below this level here, we really don't have any fresh demand zones below current price. This stuff down here at 79.50 and maybe more down here at 79.25, that's likely to slow things down and looking at how prices decline over the past couple sessions, right, or today, look at how prices decline. There's not a lot of supply built in, at least not that we see in this time frame. So if you do get a bounce, let me go down to a 15-minute chart. Okay, if we do get a bounce higher, you now have a new supply level sitting just above. So there's probably the chart's suggesting there's further downside room. Okay, because if we do get a bounce from one of those levels, those are not demand levels we would buy at, those would not qualify. Those of you that are in the class that I've been delivering, hopefully you understand why. We spent quite a bit of time on that. But we've got this new supply here, found on a smaller time frame, which suggests the dollar has more room to the downside. Okay. And in the big picture, yeah, we're looking for it to go through that pivot low, through. Remember, these pivot lows, those are not demand. So, down into here, 79.25. Yeah, prices could, I'd expect prices to bounce from here, but that's not going to trigger a trend reversal, right? The level that's likely to trigger a trend reversal is significantly lower. In fact, there's not much showing up on this chart. We'd have to go to a smaller time frame and much lower in price. Okay. And again, it all started with our 81.50 level. So that's the dollar. So having said that, what does that say about the major currencies against the dollar? Right. I think the one that we've really focused on as far as a big opportunity for a rally has been the British pound, right? Tremendous opportunity, and it's been rallying. If we look at the weekly chart, again, for those of you that have been with us for a while or in the XLTs, you remember we were in the XLTs back here in 2008, and we wrote a lot of this down, but now there's potential for this to come, maybe not all the way back anytime soon, but certainly, the rally to continue. The rally in the pound looks, the chart's telling us it looks healthy. There's downside room in the dollar, and there's nice demand levels below, price in the pound, supporting this rally, right? So if we come down to smaller time frames, okay. All right, so if we come down to smaller time frames, what's our course of action? Well, a lot of the currencies now have this, small time frame demand zone here. But let's go down to something not so small. In fact, let me make this 60-minute chart a 30-minute chart. Yeah, that's not going to do it either. Yeah, right now in the pound, it's tricky because our only fresh demand zone is the one sitting right below current price. This one right here. Okay, right there. It's okay as long as the profit zone to the upside is good. So Candy, I see your question there. If and when the pound comes back to that 5-minute demand zone, where's the dollar likely to be? Well, the dollar is probably likely to be right up into that supply zone, right? We go on to a small time frame. Okay. So that level here and that level obviously correlate with each other. They kind of have to. But that's good. The other very nice level, in fact, I would say the better level in the dollar is this one up here. The really strong level, according to the odds enhancers, is this one up here. Thanks there, Drew. Well, thanks for the vote. So I just try to do my thing. But so look at this one up here. All right, so that comes in about 79.87 to 79. You probably need to stop about 95 if you're going to trade the dollar. But anyway, so that's the level up there. So if you're going to be buying any major currencies against the dollar, make sure the dollar is up into, one of these supply zones, preferably this one up here, the higher one. Okay. According to our odds enhancer checklist, this will definitely score out as a more significant level, higher odds. Okay. So let's look at the euro. And we were on the euro 3 minutes ago. Let's go to the euro. Okay. Sorry about that. Drew, I was pointing to those pivot high, those pivot lows, and yeah, not every rally-based rally or drop-based drop is a level. It's all just those odds and answers. We'll keep reviewing them. Okay. So let's take a look at the euro. Again, big move in the euro, obviously coincides with a big drop in the dollar, right? That's how it all works. So when we look to the left, actually, let me do this. Okay, when we look to the left, we really want to get out of this range that we've been in. We're still in it, but now we're obviously near the upper part of that range, but that's good. So ideally, we want to get out of this range. And again, the trigger for all this is the key rally-based rally here. But, again, this just lines up with that dollar supply if you're trading this for the big picture. Okay. So banks loaded up down there. Obviously, banks did not buy all. There was a lot more that they wanted to buy than there was available supply. That's why you just touched that level. But now where price is likely to go. So, this pivot high is not the picture of supply for us. Yeah, that's tested. That's still a good level, though. Still a very good level. Just touched. Let's see, Edward, the black chart. Are you talking about if you're talking about the white lines? You took that, Francisco. Excellent. You're trading like a bank. Wonderful. Okay, let's scroll back. Okay. So now this is the first time we're hitting price. Nice trade, Francisco. Great. Yeah, good. Send me an email on that. I'd love to hear about it. It's excellent. So this is the first, remember, we're scrolling back, and this is the first time we're hitting price. Okay? So where's the nearest fresh supply level above current price? It's going to be right up here. Email, yeah, Conrad, yeah, email. Well, I'm not sure, I meant email. I didn't say that. So here's the first supply level above current price. Ooh, Oleg, sorry to hear that. Yeah, that does happen sometimes. And again, you're probably seeing that your best levels are also the most challenging to enter. So their supply at 140 actually comes in just a touch before. We could call it 140. And if we scroll right, you're going to see, I don't think price touched that level yet. Yeah, even that big wick there, what did we get up to here? No. Yeah, so there's no significant supply, all right, until that level up there. Okay, so watch for that. That's a great level, by the way. So that level looks great, yeah. That's 140 to about 140.65. Again, we're looking at a very large time frame. And then obviously above that, we're looking, quite a ways above that. And inside here on a small time frame, so that's really what we have in the euro. Okay? You've got a very big range. As a directional trader, the next few days, weeks look fantastic. You're probably going to see big swings in price between 137 and 140. The range is likely to be between, in that kind of 250 to 300 pip range over the next few days. So that's a great scenario if you can pick off your turning points. Because Drew, remember, those are already pullbacks into levels. So those are levels, but those are not fresh levels. Right? Those are levels, but not fresh levels. Yeah, sure, Conrad. We can look at the euro yen. So let's take a look. So we see what this is trading into in the larger time frame. I'm going to blow up this 240-minute chart. So yeah, we're into these prior highs. Okay. We now have some demand again at the origin of this rally. Most of these charts look the same. So the two things we need to do is we need to look inside this rally on a smaller time frame for some demand. We need to look inside this decline up here for some supply. Okay, because in the area we were at, we've been to a number of times already. Let's do that. Then I was doing there I was reading the chat. I forgot what I was doing for a second. So as you go down to smaller time frames, you're going to see more and more demand zones inside this big rally. Okay. Just be careful buying pullbacks to the the higher levels. Okay. But let me scroll back. Let's put a horizontal line up here. Okay, so we're up here. Still nothing right now. The nearest level is up here. That's still pretty high. Let's go down to a smaller time frame. That was that one? Okay, let's go down even smaller. Let me get some more days in here. Yeah, Conrad, so let's find that. Okay, we'll find that supply. So there's a little level here. Let me get it. Okay. So here's really the area we'd be looking at. Now I'm already down to a 15-minute chart. We really don't want to go any smaller. But this is the first level that we would take a look at here. And we put our lines in the right way. Because that level's so strong, I'm going to put our proximal line just before the level. Again, still fairly high, but there's really not much before that. 144.25. And again, I know we're only 142.80, but there's really not much. You look at the chart, there's nothing fresh before that. Right? But if you look at how this rally was formed, there's also not a whole lot to stop it from falling. No, we don't want to do any counter trend trading, right? So you got to be careful how we define all that. So we don't want to do any counter trend trading. when the trend is in, let's say you're looking at a, you pick a time frame. So Santosh, what time frame do you like to look at as far as identifying your trend? Or, are you very short term? Daily and 60 minutes for identifying your trend. Okay. So on those charts, we want to keep buying, or whatever time frame that you're looking at, we want to keep, as long as, we want to keep buying, let's say the trend is up. We want to keep buying pullbacks to fresh demand zones until you reach your opposing, fresh supply level on that daily or 60-minute chart. Until you reach that fresh opposing, supply level on the 60-minute chart, keep buying pullbacks to fresh demand zones. Does that make sense? But when you get to those fresh opposing levels, so this is very important though. So when you get to those fresh opposing levels, yes, we want to stop buying and absolutely start selling. Okay? But what you don't want to do is what everybody else does. You don't want to wait for prices to start falling from that fresh opposing supply level and wait for a big set of lower highs and lower lows and then start shorting. That's very novice trading. What you want to do is start shorting right away. You want to be in well before that new downtrend is obvious to everybody. That's how you get paid. Okay. Yeah, the news is really just going to speed up what was going to happen anyway. So, tomorrow's a nice news day in the U.S., right? I think we have non-farm payrolls, tomorrow. So, if you've got any levels somewhat close to current price, those should get hit tomorrow, I would think. Or there's a good chance that they'll get hit. Yeah, and again, you're not going to, conventional trend analysis, there's a reason why you don't see people, making a lot of money with that. You're always buying after a rally in price and selling after a decline in price. Banks and institutions would never do that, right? A bank buys low at wholesale prices when prices are down, and they sell high at retail prices when prices are up. And that's how, right? That's how you make money buying and selling anything. So, and again, it's not that difficult. The reason why it's difficult is because most people are taught backwards. But I can tell you the best filter you can use, because I know you have a lot of information coming at you, the best filter you can use is really just your own brain. And think about how you buy and sell anything, right? In your own life, when you buy cars, houses, food, anything at the convenience store, wherever you buy anything, if you don't wait, do you wait for prices to go up before you buy? And do you wait for everybody else to start buying before you buy? No, you don't do that. So why would you want to do it here? Okay. In fact, it's more important not to do it here because when you buy the chewing gum at the store, and when you buy the food and the car and most of the things you buy on a regular basis, think about it. You're not even looking for someone to buy it from you at a higher price. You're just going to use that stuff. In trading, you're dealing in a market where not only are you buying something, but you're buying something with the expectation of always selling it at a higher price, which again should make conventional trend trading just sound absolutely ridiculous. You see what I'm saying? Again, my point. Think of how you buy things in other parts of your life. We're always trying to get things at a discount or pay a reasonable price for things, and we're not even expecting to sell those things at a higher price. Here you are. Okay. That's why most people lose money. Anyway, okay, let's move on. Let's go on to another market here. I don't care what market we look at. I've got a whole list here, but if there's the one that's important to you, I'm certainly happy to look at it. So, dollar CAD, no problem. Don't forget, the only way you're going to make money trading anything is when you buy, someone's got to buy it from you at higher prices. When you sell, someone's got to buy it from you at lower prices. So make sure the chart is reflecting that opportunity. Does that make sense? If it's not, don't even think about the trade. A lot of people say, I get so many emails from people like, Sam, why don't you write a book? Why in the world would you want to write a book on this stuff? Right? Why would you want to teach the world to, well, I shouldn't say it like that. That sounds bad, but look, the way the financial system is set up, the only way you're going to make money is if someone buys after you bought and someone sells after you sold. Right now, the entire planet is trained to do the opposite. That's why Wall Street makes so much money and the average person doesn't. Again, I'm not saying I like the situation. I didn't write the rules, but it is what it is. You know. Okay. Dollar Canadian. So here's our somewhat larger time frame view. Well, Edward, I want to see both, but I primarily want to see the lower than average volume areas, not the higher than average volume. Okay. We want to stay away from those. We want to stay away from those high volume areas and focus on the lower volume areas. Remember, if there was a lot of volume, what that's telling you, there's a lot of trading happening at that price. So, which means that's going to suggest that there's not a big supply and demand imbalance there, which is exactly what we're looking for, right? Wayne, I really wouldn't say one's better than the other, because at the end of the day, behind all those markets, they're just people, with perceptions, right? Supply, demand should be the same in both. All right, here's a chart. First and foremost, without thinking, let's just run through our process. Let's quantify where we're at on the supply-demand curve in this somewhat larger time frame. So, without thinking, no thinking, fresh supply above and fresh demand below. Okay. Closest levels, here and right here. Okay? You want to get to a point where you literally glance at this chart and you can identify those levels. Okay. Nothing here is fresh. Okay. Now this is a very easy one. I'll give you that. But they're all pretty easy if you're just following the rules. The key is, though, learn the picture that represents bank demand and bank supply, and then just identify that. Sometimes it's hard to me I want to master. I try to master the art of drawing lines and boxes while talking with a decent thought. It's not easy. I struggle sometimes. Let's see. 109, Nick. Are you saying this level right here? Like exactly where I'm pointing? Oh, this. That one? No. So I'm glad you pointed it out. We would never, ever call that a fresh demand zone. Okay? That's a pullback into demand to the left. Right? It's got to be fresh levels. Again, are you in that class we've been doing? We've had 2 sessions already. If you are, you should know the difference. And I'm only asking because I want to know what you know and what your level is. Okay. So there's our fresh supply, fresh demand below. And okay. So that's a good question there by Boyke. How do you know there's still orders there? Well, if you look at this level right here, right? So prices are trading sideways. If supply and demand were in balance, in other words, if there was equilibrium here, if things were equal, if there was an equal amount of supply and an equal amount of demand, at this price range right here, wouldn't prices just keep trading sideways? Right? They would, right? If there was an equal amount of supply and demand here, price would never move away from this level. But the fact is, price couldn't stay there and declined away in strong fashion. So the fact that price declined means that there's a lot more supply here, willing supply than demand. Meaning whoever's selling here, whoever it's many different people, groups, whatever, obviously they didn't sell all that they wanted to sell. If the willing sellers and buyers were able to fill all the orders they wanted to fill at this price range, right, price never would have left, but didn't happen. So price falls away. Okay. It's exactly what happened with our dollar here. Remember, we put this level in last time? Same scenario. If you look in the upper left corner. If supply and demand for the dollar were equal here, prices would just keep trading sideways at this level, but they couldn't. Why? Because there's a lot more supply. So, right, and that's why when price comes back to this level, it touches a level and falls because there's still many, many sell orders sitting there. In fact, what if price comes up to this level again? The chart's telling us there's still a lot of sell orders sitting there. Yeah, so, and Mark, you're talking about the flip there, right? Or maybe you didn't even mean to, but you are, so that's a great point, right? So that makes that such a strong level. Yeah, absolutely. If your eye can catch that, you should be able to do very well, because that's key, identifying that whole flip scenario. So anyway, there's our larger time frame dollar Canadian. So knowing that, again, just little things like, now that tells us, you know what, we're a little bit closer to supply than we are to demand. And so we might want to lean on, a shorting opportunity over a buying opportunity here. So knowing that in the larger time frame, you're closer to larger time frame supply than demand, when we come down to, say, the smaller time frames, true, you don't have to, but, I like to. Okay, so we've got a couple levels here. Look, rally-based drop and drop-based rally are fine. You just have to make sure that, score everything out separately. Make sure that, again, fresh. That's the key. Yeah, in the 5-minute chart, this level shows up really nice. So we've got that level there, and then if we're drawing our lines in, remember our last lesson we went over how to draw our lines. That one would be right there. Remember, we want to catch the origin of that drop with our proximal line, which is the line I'm drawing in now, and then our distal line is always for supply at the highest price in the base with our stop just beyond that. Okay, so there's a couple levels in the Canadian. Again, we're mixing long time frame long-term opportunities with these short-term opportunities. Sometimes it can get a little confusing, but I want to make sure everybody, we've got long-term traders with us here today and short-term traders. Those levels above, 109.90. Okay. All right, let's keep going. And again, for those of you that are in the class that I'm delivering, that we've had 2 sessions already, you should have received your workbook, and a lot of this is in there. So refer back to that if you're all confused about what we've been going over in that class. Let's keep going here. Oh, crude oil, sure. We've been looking a lot at all the FX markets. Let's take a look at crude. Oh, you haven't? All right. If you haven't received it, I know some people did. I will shoot an email over as soon as we're done here and make sure that happens right away. Gary, yeah, we're halfway through the class right now, but we might offer. You might be able to offer another one in time, but we're halfway through there now. We'll let you know. I'll bring it up in here if we're able to do it again at some point. 103.50. Let's see. Yeah, absolutely. FP. So 103.50 up here in the larger time frame, and then obviously on the daily, looks like we're coming into this level here. Oh, I was looking at crude this morning. I'm like, this chart looks familiar. I didn't realize. I forgot we're looking at crude. Okay. So, yeah, crude, we're kind of coming into an area of demand here. If we go down to the smaller time frames, though, and investigate that demand zone, take a look. Right? Not that great. See that? See this demand zone? on the smaller time frames, we'll probably look down in here in the 99 area. But if you look at, this is a great time to look at, because if you look at the supply just above 103, and you look at the demand below, you can see, right? You can see there's nice quality fresh supply levels above, and really shaky demand below. In fact, there isn't any quality demand on this time frame. I'm just reading back here. Let's see. Boyke, I've really not seen a market not come back to a level. Any level that's ever been created, I don't know that I've seen. You don't really ever see markets that don't come back to levels. Sometimes it takes a little longer than other times, but they always come back to the fresh levels. And if you understanding how the system works, they really have to. I mean, that's where if they didn't come back to levels, banks wouldn't be making any money. It's like if people stopped going to casinos, the casino wouldn't make any money. The QM, Mike Macau. So that was right into some much larger time frame stuff. You're probably looking at this weekly and daily stuff over here. So I think this is a significant chart for oil. Even though, yes, oil popped up really big the other day, you're down a ton from those areas. And again, notice this fresh supply above, and really, really nothing exciting below. So we'll have to go to a smaller time frame. I'm sure there'll be something down there, but yeah. So our key. So I totally get that, and that's going to happen in the spot market. It's going to tend not to happen in the futures market, but in the spot market, that's going to tend to happen. That's why we expand our zones a little bit. If you're trading the Forex market through the spot market, you're going to have to just extend. You have to account for the spread and brokers kind of making markets and banks making markets, right? So we widen the level just a teeny bit, which I think is what you're kind of suggesting. But in the futures markets, you're not going to need to do that. Yeah, so if we come down to this time frame, so I see where price is at right now. Let me blow this up a little bit. Just because price just touched this level and turn, I understand it's kind of free falling right now, but it's probably gonna, you're probably gonna see some bounce in here, down in this area right here. Just a little bit of that can produce a little bit of a bounce. Where I would be comfortable pushing the buy button, is down here, quite a bit lower in the, mid 98 range. But I wouldn't be surprised if you saw a little bounce from right in here. Literally kind of now. And don't rush and push the buy button, but you've got two levels on top of each other here. What I want to do is just put in the lines as they should be properly put in. Let's see if they've been hit at all. Probably sitting right on that now. Again, the level I'm drawing in now has already been touched, so it's technically not fresh. But again, I wouldn't be surprised if you made it just a teeny bit lower, like we just did, and you get a little bounce from this area. And I'm talking about all right in here. And of course, the next, the more significant terms likely to come from the mid 98 range, if that makes sense. So don't be surprised if you get a little bounce right here. How much of a bounce? Well, it depends on that smaller time frame, right? So look at the 5 minute or 10 minute. Maybe you get a bounce up to this, right? Here's some sell orders. Remember, you're going to bounce from the buy orders to the sell orders. That's all any market is ever going to do. That's all they've ever done. That's all they're ever going to do. Where are the buy orders? Where are the sell orders? So watch for that. So there's my email address, at tradingacademy.com, Seiden at tradingacademy.com. If you have any questions, I just posted it in the chat. You can certainly shoot me an email. And hopefully that was helpful. And for those of you in the class, we now move into the live trading portion, live market portion. So I think we'll see you next week, right? Our next session's then. And again, if you have any questions, let me know. Have a great day, everybody.